If you're a business owner and you're thinking about using a whole life insurance policy as a strategic saving strategy where you can store your hard earned income and revenue from your business to grow that cash with compound interest growth tax free, but you're concerned about the cost to borrow when you need to access that money, well, I've got a secret for you. I'm not a tax expert or a CPA or an attorney, so make sure you seek legal advice and counsel from an accounting professional. However, what I'm about to show you is a way that you can potentially offset the interest rates from your policy loans as a business owner. It's as simple as Pigeon Loans. Pigeon Loans provides a product that allows you to make a loan from one person to another. It can be from peer to peer, peer to business, business to peer, or business to business. And they act as an intermediary. And so what they do is they draw up a legal document, a contract, that makes both parties legally binded. And they manage the relationship between both parties. And so you could borrow money from your life insurance policy. You've borrowed that money personally as the policy owner. You can make a loan personally from yourself to your business. Now, with Pigeon Loans, you'll be able to document that loan as an actual contract and legal agreement between yourself and your business to lend your business the money. Now, you do have to use the money in your business. You can't make that loan to your business and then go use it on a vacation or use it for frivolous use. You have to use that money in your business for business use, whether it's for expenses or you're going to use it for marketing or whatever your investment strategy is for your business to grow and generate income and revenue so there's a return on investment. But when you pay that loan back to yourself from your business, the interest on that loan that you charge yourself, and you can charge yourself as much interest as you'd like, that interest is a potential tax deduction. Again, if used in your business, the interest on your loan to your business from yourself personally is a business tax deduction. So this is not going to completely wipe out the cost of interest on a whole life insurance policy loan. However, it can definitely offset some of that cost because it's going to be a tax deduction to your business. But if you don't want to just do this without having it properly documented, and that's why Pigeon Loans is so important, because with Pigeon Loans, it will be recorded, it will be documented, and you can provide that proof to your accounting person, to your attorney, and to the IRS. So make sure you use a proper intermediary that documents that loan between yourself personally to your business so that you can get that tax deduction on the interest rate on your loan. And of course, personally, you simply pay back your policy loan. Now, if you don't know what I'm talking about as far as setting up a policy and borrowing against it, this strategy is commonly known as the infinite banking concept, or becoming your own bank, or your family bank concept. I don't like any of those titles. I simply want to call it a whole life insurance saving strategy, where your focus on the policy design is not for the maximum death benefit. However, it is the opposite. It's for the minimum death benefit with the maximum cash storage, or the maximum saving space to store cash in the policy. The purpose of the policy, again, is not for the death benefit, even though it does have a death benefit because it is a life insurance policy. And the death benefit does protect your policy loan in the event that you're unable to pay it back. So setting up a properly designed policy with a major mutual company that pays dividends on the cash value, and you have guaranteed compound interest growth on the cash set portion of the policy, is the safest, most secure way and place to store your money. Not as an investment strategy, as a saving strategy. Your investments are where you're going to make your real money. Whether you're investing in the stock market, the real estate market, in crypto, in your own business, or whatever venture or investment that you have that you'd like to put your money into, That's where you're going to make wealth. This is a safe, secure play, not an investment play that you can park your money, and you should have in your whole life policy your two things. Number one, as an emergency fund. Your emergency fund should start with at least 6 months of income, but your goal should be have up to 12 months of income saved inside of your policy. And number two, as an opportunity fund. Now that is different for everyone depending on what you're thinking about in the future, but typically you want to have double or triple the amount of your emergency fund. So this way, if there is an opportunity, you're not going into the emergency fund portion of your cash vault. That is going to remain your emergency fund, which is 6 to 12 months of your income stored inside the policy in the cash savings section. And then 2 to 3 times that amount is going to be also stored inside of the policy as an opportunity fund. What's an opportunity fund? It's when you have an opportunity to make an investment or to make a purchase that is going to either save you money or give you a return on investment, and you want to be able to borrow against your policy to make that purchase or make that investment. That's your opportunity fund. And of course, because again, this is a life insurance policy and it is whole life, so it's going to last until the end of your life, the death benefit protects everything, and the death benefit is your generational wealth play. So that's your legacy that's going to be left to the next generation. You couple that up with a trust. Inside the trust, you can create rules and laws. You can even teach your beneficiaries to take a portion of the death benefit that they inherit and purchase new life insurance for themselves to create a perpetual system of wealth and generational wealth building for your children and your children's children's future. So this is a way that you can create wealth for generational wealth to come. It is highly unlikely that you're going to generate as much income in your life as you could potentially purchase in a death benefit of a life insurance policy. The bigger picture is the generational wealth and legacy that you leave behind. But remember, a whole life policy is not designed for the maximum death benefit. So how can you make up the difference? You can make up the difference with a convertible term policy. And this is going to give you the opportunity to purchase the maximum death benefit on a convertible term life insurance policy. Convertible means that at some point in time before the term expires, you can convert it into a whole life policy. But if during the term you pass away, you have purchased the maximum death benefit that you can afford at the lowest potential cost to you. Now, how much death benefit should you have? The minimum death benefit should cover your human life value. What's your human life value? Your human life value is your annual income multiplied by either 20 or 30, or the amount of years that you anticipate to continue to make the current income that you're making right now. So that could be either multiplied by 20 or 30 or even more years, depending how old you are. Minimum 20 or 30 years is going to get you your human life value. And that's how much death benefit you have. Now, if you try to purchase that much death benefit in a whole life policy, it's going to be much more expensive. However, again, you use your whole life saving strategy to create your own personal mini bank inside of the whole life policy for the purpose of storing, protecting, and growing your cash tax-free where it's still accessible, so you can still leverage it and use it in real life. And you use a convertible term policy to purchase the maximum death benefit so that you can leave that death benefit as your generational legacy to your children and your children's children. If this video was of value to you, please make sure you like, subscribe, and share. And if you'd like to take advantage of a free consultation for 15 minutes, if you have questions, if you want to actually see an illustration based on your age, your numbers, how much you want to see savings on an annual basis for, then submit the illustration request. Both of these links will be in the description below, so you can schedule a free 15-minute call or an illustration request. And with that, we're going to schedule about 45 minutes on a Zoom call to review a live illustration for you, personalized, one-on-one, for you to be able to take advantage of and begin your whole life saving strategy. Thank you for watching. This is Sebastian Boyd, the Approved Guy, signing out.